Hi, today we're going to have a look at the 2015 Leaving Cert Higher Level Tabular Statement. As with all tabular statement questions, we are given a balance sheet and we are given a number of transactions that we have to account for. And then we're asked to record on a tabular statement the effect of these transactions. First of all, we have to put in our opening balances for assets and liabilities. So if we go to our solution here, first of all, we're going to put in the assets. The first asset we have is goodwill, and the net book value of goodwill is 45,000. Then we're going to put in our fixed assets, and we're going to put in the cost less the depreciation. Instead of just putting in the net book value, we're going to put in the cost less the depreciation for all three of them: land and buildings, equipment, and delivery vans. So land and buildings were 690,000, and the depreciation we will put in as a minus 55,100. Equipment is 30,000, and depreciation of equipment is minus 2,500, and delivery vans are 86,000, and depreciation of delivery vans minus 32,000. Now we'll put in our current assets. So the first current asset we have is stock, then insurance, prepaid, and debtors. So stock is 73,600. Insurance prepaid is 1,000. And debtors are 52,900. And there's no bad debt provision in this question. So now we just total our assets, which come to 888,900. We now put in our liabilities. First of all, we're going to put in our liabilities less than 1 year, or our current liabilities. So first of all, we're going to put in creditors, bank overdraft, and expenses due. And they're coming directly from the balance sheet. So creditors are 82,300. Bank overdraft is 11,900. And expenses due are 3,700. We will then put in our share capital, share premium, and profit and loss balance. So the share capital or ordinary shares are 480,000. Share premium is 75,000, and profit and loss balance 236,000. Now, at the bottom here, the revaluation reserve and the rent receivable prepaid, they come into the question later on. There are no opening balances for those. That's why they are highlighted. So I'm going to total my liabilities, and they also come to 888,900, and the opening balances are balanced. We will now look at our first month. So January is the first month we have to account for. So in January, Watt bought an adjoining business, which included the different assets and liabilities mentioned here. So we have to put in those assets and liabilities, and the difference will be goodwill. And that's always the way this entry is taken account of. This comes up pretty much every year. So the first thing, with buildings 240 and delivery vans of 42. So if I go up to my assets and I put in buildings are 240,000. Delivery vans are 42,000. Creditors are 54,000. So I get onto my liabilities and put in 54,000 for creditors. It then says that the purchase price was discharged by granting the seller 220,000 shares. So my share capital, or ordinary shares, are going to go up by 220,000. And the premium is 20 cents per share, which, as the €1 shares, that would be 20% of the 220,000, which is 44,000. So now I'm going to add up my liabilities, which come to 318,000. If I add up my assets, they come to 282,000, and the difference between the 318,000 and the 282,000 will be goodwill. And in this question, that is 36,000. So you'll always just put in your assets, put in your liabilities. The liabilities will be greater, and then the difference between the assets and the liabilities will be goodwill. So now I total my assets for January, and they come to 318,000. And I total my liabilities, and they come to 380,000. So each month should balance. So you should total for each month's assets and liabilities should be the same. February, a creditor who was owed 2,000 by what accepted a fridge freezer, the book value of which was 2,200 in full settlement of the debt. This fridge freezer had cost 4,000. So I'm going to do a small working for this just before we fill it in to see whether we made a profit or loss when we got rid of the freezer. The cost of the freezer was 4,000. In the question, so the cost is 4,000. It tells us that the book value is 2,200. So sometimes they might give you the depreciation and you have to work out the book value. Sometimes they give you the book value and you work out the depreciation. So here we're told the book value is 2,200. So net book value is 2,200, which means the depreciation must have been the difference between the two, which is 1,800. So according to us, it was worth 2,200. We used this to pay off a creditor who was owed 2,500. So we owed the creditor 2,500, and effectively we only paid them 2,200 because that's all the refrigerator is worth. So we made a profit of 300. So to reflect this in the tabular statement then, in February, we have to take out 4,000 from equipment, the cost of equipment, because we don't have the fridge freezer anymore. When you get rid of an asset, you also have to take out the depreciation because you don't have that asset anymore. So the depreciation on the refrigerator was €1,800. So that will come out of depreciation of equipment. Now, as depreciation of equipment is a minus, to take it out, we're going to put in a plus €1,800. We do not owe the creditor 2,500 anymore because he took the fridge freezer in full settlement of the debt. So creditors are going to go down by €2,500. And as shown below in the workings, we made a profit of €300. So profit and loss balance will increase by €300. So now to add up the assets for February, come to minus 2,200, the balance, and total the liabilities, and they also come to minus 2,200. In April, they decided to revalue land and buildings on the 1st of 4, 2014 at 990,000. The land element is 170,000. Now, the land element of 170,000 is only relevant when we're working out the depreciation in December. So for the moment, we're just going to concentrate on the revaluation to 990,000. So if we look at land and buildings, currently land and buildings were 690 and they increased by 240, which is 930,000. So they're going to be revalued to 990,000. So the difference between 930,000 and 990,000 is 60,000. So land and buildings are going to go up by 60,000. When you revalue land and buildings, again, you have to take out the depreciation. So the depreciation currently is minus 55,100. So to take that out, we're going to put in a plus 55,100. That will get rid of it. And then the two of these figures together, which come to 115,100, will go in the revaluation reserve down below, 115,100. So the total this month's assets come to 115,100 for April, and to total the liabilities for April, again, they come to 115,100. May. So in May, we received a bank statement at the end of May showing a direct debit of 3,600 to cover fire insurance for the year ended 31st of the 3rd, 2015. And a credit transfer received of 8,600 to cover 10 months rent received but in advance from May the 1st. And again, this is a standard note that comes up pretty much every year. So there's two things going on here. First of all, there's fire insurance. Now with the insurance, we need to be very careful whether at the end of the year there is insurance due or insurance prepaid. We are doing this tabular statement at the end of 2014. So if we paid insurance up to the 31st of the 3rd, 2015, we will have insurance prepaid if we paid some of next year's insurance. So that's going to be insurance prepaid, not insurance due. Then the rent receivable, somebody has overpaid us rent. They paid us 8,600, and that's from the 1st of May. So that means 8 months will be for this year, and then 2 months for next year. So at the end of the year, there's going to be rent receivable prepaid, which is a liability because somebody's overpaid us rent. Now, for the moment, we're just going to put in the figures and we're going to tidy them up in December. We're going to work out the due and prepaid parts of them in December. So for the moment, I am going to put in the insurance prepaid, I'm going to put the 3,600. Down below in the rent receivable prepaid, which is a liability, I'm going to put in the 8,600. And it's going to move that. That's in the wrong column. That should be here. And then the difference is going to go into bank because we received 8,600. We paid out 3,600. So we're up the difference, which is 5,000. We received 5,000 more than we paid out. So that 5,000 is going to reduce our bank overdraft. Because it's an overdraft, if we received money, it's going to reduce the overdraft. So I'm going to total these up. And then in December, I have 2 columns in December. One of them is to work out what is due and prepaid at the end of the year. So the assets come to 3,600 and the liabilities should also come to 3,600. July. In July, a van which had cost 15,000 and had a book value of 3,000 was traded in against a new van costing 24,000 at the start of July. We got an allowance of 4,500 for the old van. So again, I'm going to do a little working on this. So the cost of the van that we disposed of was 15,000. Now it says again it is at a book value of 3,000. So if the book value is 3,000, means the depreciation must have been 12,000. We got an allowance of 4,500, so we thought it was worth 3,000. The net book value was 3,000. We got an allowance of 4,500, which again means when we made a profit of the difference, which is €1,500. If the allowance was less than the book value, we would have made a loss. So I need to put these figures again into the tabular statement. So in July, delivery vans are going to go up by 9,000 because the van we bought was 24 and the van we sold was 15. So if I add 24 and take away 15, what I'm really doing is increasing it by the difference between 24 and 15, which is 9. So delivery vans are going to go up by 9,000. I have to take out the depreciation of the delivery van that we sold because I don't have that anymore. The depreciation of the van we sold is 12,000. And again, because depreciation is a minus, to take it out, we're going to put in a plus 12,000. Now I have to put in the bank amount. So the new van vehicle is costing 24. We're after getting an allowance of 4,500 against it. So effectively what we're paying is the difference, which is 19,500. So if we pay 19,500, means our bank overdraft is going to go up by 19,500. And as shown below, we have made a profit of 1,500 on the old vehicle. So profit and loss balance will go up by €1,500. And now to total these, my assets for July come to $21,000, the total $21,000, and the liabilities should also total $21,000. November. We received a payment of $1,260 from McDonough, a debtor who had previously been written off and now wishes to trade with Watt again. This represents 90% of the original debt and is going to pay us the remainder, the other 10%, in January 2015. Because he is now going to pay us. We sold him goods on the same day to the value of 720, and this was a markup of 20%. So this is a bad debt that we had written off, but it's now recoverable. He's going to pay us. He's paid us 90%. He will pay us the 10%. And because of that, we're selling him goods. So again, I'm going to do a working for this. So what we received was 90%, which is 1,260. So if that's 90% to work out the full debt, it's 1,260 divided by 90 multiplied by 100. The full debt was €1,400, which means he still owes us the difference, which is 140. Now, the goods that we sold him, it says in the question, had a selling price of 720, which is 120%. So to work out the cost price, 720 divided by 120 multiplied by 100, the cost price was €600, meaning the profit was the difference between the two was €120. We now have to put these into the tabular statement. So if we go up to the tabular statement for November, the first thing I'm going to do is take €600 out of stock, because the cost of the stock that we sold was €600, and stock is valued at cost price. So €600 will be taken out of stock. Next of all, I'm going to fill in debtors. Now, just to see what the debtors amount is, he still owes us €140 from the bad debt, along with the €720 from the goods we sold him. So in total, the debtors are 140 plus 720, which is €860. So debtors are going to go up by €860. The bank overdraft is going to decrease by the amount that he has paid us. So what did he actually pay us? He paid us 90% of the debt, which is 1,260. So the bank overdraft is going to go down by 1,260. And the profit and loss balance, if we look at the profit and loss, we made a profit of €1,500 from the bad debt that was written off. Sorry, looking at the wrong part of it here. We made a profit of €1,400 from the bad debt. We had written this off and it's now fully recoverable, so we're up €1,400 here, along with the profit of 120 from the goods we sold them. So in total, the profit goes up by €1,520. So my profit and loss balance is going to go up by 1,520. So if I total the assets for November, they come to 260. And if I total the liabilities for November, they also come to 260. Now December, there's two things going on in December. We're going to work out the depreciation, and then we'll do on a separate column work out the due and prepaid parts of May. So the depreciation first. The depreciation charge on buildings for the year is to be 2% of the value at the 1st of April 2014. So I'm going to do a working on depreciation of buildings. Now, the value at the 1st of April 2014, if we look at land and buildings, we can see that the value was 990,000, what they were revalued to. So the value at the 1st of April were 990,000. We have to take away the land element because you don't depreciate land. So if we take away 170,000, that comes to 820,000. The depreciation rate is 2%. So if we get 2% of 820,000, it's 16,400. And sometimes this can be tricky as it's worded differently in some questions. It says the depreciation charge on buildings for the year, so we don't just work out 8 months of it or 9 months from April on. We get the depreciation for the year, so we leave it as it is there. The second thing we have to do is to work out the depreciation of delivery vans. Depreciation of delivery vans is 20% of cost per annum from the date of purchase to the date of sale. So back to the question, if we look at the delivery vans were 86, and then at the start of January, they increased by 42. So for the full year, delivery vans were 86 and 42. It's 128,000 for the full year. Then on the 1st of July, they increased by a further 9,000. So for 6 months, they increased by a further 9,000. So 128,000 for the year. And then after 6 months, they increased by 9,000. So when I'm working out the depreciation, for the 12 months, it's 128,000 by 20%, because that was for the full year. And then for half the year, they increased by 9,000. So 9,000 by 20% is the rate of depreciation. I'm going to multiply that by 6 over 12, because that was only for 6 months they increased. So in total, depreciation of buildings is, sorry, that should be by 20%. Forgot the percent sign. So that should be 26. I'm going to add those again. 26,500 is depreciation of vans for the year. So to fill these in above, depreciation of buildings, we worked out to be 16,400. And as depreciation is a minus, the depreciation for this year is going to increase the accumulated depreciation. So that's also going to be minus 16,400. The depreciation of delivery vans is 26,500. And again, it's going to be minus 26,500. And as we know, depreciation is an expense. So I can just total these. So my total depreciation is 42,900. So my profit and loss balance below is going to go down by 42,900 because depreciation is an expense, which is going to reduce my profit. So again, if I total these, it should come to minus 42,900. Now the last thing I have to do is December is tidy up the due and prepaid part of the bank statement in May. So again, I'm going to do a working for this. So the rent receivable, if I go back to May, it says there was rent receivable of 8,600, and that's for 10 months in advance from May the 1st. So from May to December, which is 8 months, are for this year, and then the other 2 months will be for next year. So we're going to work out this year's amount. So if I get my 8,600 divided by 10, because it was for 10 months, and 8 of those months are for this year, comes to 6,880. The insurance, if we look at the insurance, was for 3,600, and that was for a year ended 31st of the 3rd, 2015. So it was for a year, for 12 months. 3 of those months are for next year, meaning that 9 of the months were for this year. So again, we're going to work out this year's amount, which is the 9 months. So it's 3,600 divided by 12, because the payment is for a year, and 9 of those months are for this year, which comes to 2,700. So that's the 9 months. Now we also have to take account of the prepaid at the start. There was insurance prepaid at the start, 3 months insurance prepaid at the start, which were for January, February, and March this year. So they needed to be included. That 1,000 needs to be included because it was for this year. So I'm going to have to add on the 1,000. Which leaves us with 3,700 for the year. Now these two figures here, the 6,880 and the 3,700, have to be included in the tabular statement. So the 3,700 for the insurance prepaid is going to be taken away here, because that's the 9 months that we worked out plus the 3 months at the start, the 12 months insurance for the year. And the rent receivable prepaid, the 8 months will be taken away here, leaving 2 months left over in the balance here. The final 2 months should be here. But for the December, we're just working on this year's the 8 months. We're going to take it away. It's going to be minus 6,880. Now, the difference then between the two of them is going to go into the profit and loss balance, because we're recognizing rent that we received of 6,880. The insurance we paid out was 3,700, So the difference here is going to go in the profit and loss balance. 6880 minus 3700. So my profit would have went up by 3,100 because I received more income from the rent than the insurance expense I paid out. So now again, I'm just going to total these. Going to total December here. My second is, and again, I usually do 2 December columns, one for the depreciation and one for the due and prepaid. So that's minus 3,700. And again, I'm going to total this to give me minus 3,700. Now I'm just going to total all of these across. So first of all, I'm going to total my goodwill, 81,000. I'm going to total land and buildings, which come to 990,000. Depreciation of land and buildings is minus 16,400. Equipment, 26,000. Depreciation of equipment, minus 700. Delivery vans, 137,000. Depreciation of delivery vans, 46,500. Stock, 73,000. Insurance prepaid, 900. And debtors, 53,760. And in total, they come to 1,298,060. I'm now going to total all my liabilities across. Creditors are 133,800. My bank overdraft comes to 25,140. Expenses due are 3,700. Ordinary shares, 700,000. Share premium, 119,000. Profit and loss balance, 199,600. Revaluation reserve, 115,100. And rent receivable prepaid, 1,720. And again, if I get my total for the year, comes to 1,298,060. And I now can see that as these figures are the same, the tabular statement is balanced. And once it's balanced, you'll be hoping that it is correct. So that is the 2015 tabular statement. It's the 60 mark question. I've done some other 60 mark questions and also some 100 mark questions on the YouTube channel. So if you want to look through those and subscribe to the channel, and hopefully they will be also helpful to you. Thank you.